Thank you very much for the introduction. We are very pleased to have an opportunity to provide information regarding our Work Opportunity Tax Credit Program to all of Paytime's clients. Good afternoon. My name is Philip Wentworth, and I'm the Vice President of Business Development and Sales for Claris Solutions. I am joined by my partner in crime, Teresina Maxwell, who is our residing Chief Operating Officer. Teresina leads our operations and customer experience at Claris Solutions. Her experience with WOTC stems from 8 years of working at Ernst & Young in the tax credit and incentives team. While there, she helped implement WOTC at large U.S. retailers and work with other international companies to maximize credits available to them. This is where Teresina learned to care about the details in analyzing complex compliance and maximizing tax credits and incentives for her clients. Teresina is a licensed attorney with her law degree from The Ohio State University, Moritz College of Law, and her accounting degree from the University of Akron. Teresina, welcome.
Thanks, Philip. Glad to be here.
First thing, we wanted to thank Paytime again for this invitation to present our Work Opportunity Tax Credit Program to their clients and users. Claris Solutions is an official partner with Paytime. We actually have some Paytime clients who are clients of ours today. And so naturally, we thought providing information regarding our WOTC program might be beneficial to other Paytime clients. This webinar is designed to give all attendees an overview of the Work Opportunity Tax Credit Program, which is a federally approved tax provision, and specifically how it can be leveraged by your organization to increase profitability, sustainability, and to ensure a competitive advantage in regards to your recruiting marketplace. First, let me go over some house cleaning items before we actually start the presentation. Our presentation today is about 20 slides in length and will take approximately 35 to 40 minutes. We have scheduled this webinar to last a full 60 minutes, so we are going to leave a good 15 to 20 minutes at the end for a extended Q&A session. Also, we have muted all attendees during the presentation portion of the webinar. However, when we get to the Q&A session, you will be able to type and submit your questions directly to Teresina and myself. With that said, let's get started. Some quick information about Paytime, as many of you are already aware since you're existing clients. Based in Cleveland, Ohio, integrated payroll solutions. They do provide payroll, tax, human resource, and business solutions, and they do have a combined 35 years of experience within the payroll processing arena. A little bit about Claris Solutions. We are based in Columbus, Ohio. We are tax accountants and experts. WOTC itself has been around for 20 years, and we do have 30 years combined experience in executing WOTC programs for our clients. We are WOTC focused. We don't do payroll. We don't do any other sort of incentive programs. We eat, breathe, and sleep the Work Opportunity Tax Credit Program. And we do have a turnkey WOTC program for many types of businesses, whether you're in transportation, warehouse, retail, hospitality, restaurants. We have a program that's designed for you. For those that may not be familiar with the Work Opportunity Tax Credit Program, it was first enacted about 20 years ago, and the whole design of the program was to encourage employers to look at typically disadvantaged employee pools, those that came from economic or even physical disadvantaged pools. The tax program that we're talking about is available to all employers. If you pay U.S. federal taxes, you are eligible to participate. You're even eligible to participate if you're a nonprofit, and we can get into that towards the end of the presentation. In 2012, WOTC providers experienced a huge windfall in the form of Congress approving the use of electronic screening. Before, it was a little bit archaic. You actually had to have a wet signature from each potential eligible employee, or some states would mandate that you walk each eligible employee down to the workforce agency. So a lot's changed since 2012. We're now able to screen electronically and actually get employees and applicant signature over the internet. As many of you may be aware, Congress recently approved the bill extending WOTC for an additional 5 years through 2019. So we're not just talking about what we can perform for you today, but rather what we can do for you 4 or 5 years down the road. And then specifically, we wanted to talk to you towards the end of the presentation about a unique opportunity called the Look Back Review. Congress has approved all employers to conduct a look back review for 2015. This allows every employer in the United States to screen retroactively their new hires in 2015 to determine if any new hires are eligible for the program. This program will end at or around April 30th of this year, so it's a little bit relevant in order to conduct the 2015 look back review. Very quickly, I'm sure some of you are jumping ahead and wanting to know who is eligible for the WOTC program. There are 9 eligible target groups for the WOTC program. They are identified on this slide on the left, and on the right column, we have identified the maximum credit allowed for each target group. We do have a new target group in 2016 at the very bottom. You'll notice it's long-term unemployed. That is a new category for 2016. And we'll cover some of these as we move through the presentation. But these are the eligible target pools for the WOTC program. I am sure that many of you are looking at this list and thinking to yourself, well, we already recruit and actively employ people from these pools. That's fantastic. You're not alone. Many of the clients that we talk to currently are already sourcing employees from these pools. And so the question is, if you're already hiring people from these pools, why not take advantage of the WOTC program and get a tax credit? For putting numbers together, we have a very simple WOTC economic formula. It's basically column A times column B times column C equals your estimated total tax credit. If you look at column A, we've just given some numbers of new hire milestones, 50, 100, 150 new hires. The national average for eligibility for all new hires is right around 17.8%. Claire Solutions is averaging right around $2,100 per each eligible employee. So if you take the number of new hires in 2015 times the national average of 17.8% times our average of eligible employee, you can very quickly estimate what your estimated total tax credit could be in 2015. These are real numbers. You can obviously see the windfall from an economics standpoint as you get down the list. With that said, I'm going to turn it over to Teresina to walk you through a little bit more about Claris and our solutions for WOTC.
Thanks, Philip. And yes, I thought it might make sense to talk through exactly what happens when you hire an individual that does qualify for the tax credit. So what's the process for, from the time that person comes in, fills out an application, gets screened, to actually getting a number that is taken on the tax return. So I'm going to use the example of Jane Doe. So if Jane Doe were to come in and she, was screened, part of her job application, she's hired, onboarded, different things like that, we have 28 days after her start date to submit specific information to the state workforce agencies to have her certified. So I know that Philip has talked about how this is a federal tax credit, but it is administered at the state level. So no matter what states you're in or how many different locations you have, we would work with the individual states where you're located, turn in this information and begin the process of having Jane Doe certified for a tax credit. So for some categories, if she's, we submit her, we also need to file some documentation. So for instance, if she were a veteran, we file the DD-214, and the way that we get that information is going to the Department of Veterans Affairs, and they're great at responding and giving us, they're familiar with this program, giving us the documentation we need to prove that, hey, Jane Doe does qualify for this tax credit. So we go back and forth with the state workforce agencies between, step 2 and 3 there to make sure they have everything they need to feel comfortable that she does in fact qualify for the tax credit. And at that point, they'll send out a tax credit certificate to us saying that, hey, this person qualifies, you can go ahead and take the tax credit on your return. We then calculate the credit, and I'll go into some details on what it looks like to actually calculate the credit. And then that credit is taken on a form, an IRS form, on the tax return against your federal tax liability. So this is just the process that we go through for every single person that comes in and that is qualified as a potential tax credit individual. We go through this process for them to make sure that we're able to certify and take that tax credit on the return. Here then is the process that we go through with the client, with the company themselves. So we start out, we like to set expectations as to what do we think this tax credit would mean for your business. And this is, we take in different factors, industry, location in the U.S., different things like that. But a really narrowed version of this is just saying, hey, how many new applicants do you have, or new hires do you have in an annual year? And then taking a 15%, if 15% of them qualify for the tax credit, a average credit of over $2,000, we think for you, company, ABC, that this tax credit would be around $750,000. So we walk through this up front. We say this is what we're shooting for, and then we actually start implementing the program. The first and most important step that needs to happen to get this all started is to have people actually screened to determine whether or not they may qualify for the tax credit. So we do this, for Paytime clients. What we do is we just implement, I know some of them use an actual paper form. When people fill out a job application, they just also fill out the WOTC forms and then send those to us, and we do it that way. But others, especially, some in the restaurant business and especially other industries, they just have this all electronic where somebody can go through, they can fill out the WOTC survey online as they come in, and then we on our end are able to determine whether or not somebody qualifies. And we have some proprietary software that we use for exactly that purpose, to get that information and to have people sign the correct documentation, different things like that. But really, it is critical that we watch and see, hey, how many new hires are actually being screened, and if there's a breakdown, if only 50% are being screened, hey, let's talk about that. Is there a way to improve it? Because it will impact, it directly correlates, as you might imagine, to the amount of tax credit that you could get. If 50% of people are getting screened, you're likely only getting 50% of the tax credit that you could get. So we watch this pretty closely. These next two, identifying qualifiers for hiring and tracking hours, this is where it really gets fun, and we get to, not only make sure that everybody gets screened, but we can really increase the tax credit by being purposeful as far as how the program is implemented. So this identifying qualifiers, this happens when companies implement the tax screening process actually as part of the job application part rather than just at the onboarding. So if people are hiring, 10 folks and they have everybody fill out job applications and this WOTC screening, then we can go back and say, hey, Jane Doe and Joe Smith both qualify for the tax credit. If you're, looking to hire some people, all things being equal, hire the individual that's going to give you a tax credit. And this really was the intent of Congress, was to help hiring managers and those that do this, the recruiting work and different things like that, take this into consideration to help give these folks, which like Philip mentioned, typically have a more difficult time finding a job, giving them a chance or trying to equal the playing field so that they could actually, be put in positions that they might not otherwise get. So we have these types of documents and reports that we then send out. For some clients, it's automatically a part of their ATS, and they see as soon as somebody fills it out whether or not that person was qualified. For others, we send out actual reports so they can take a look at it and compare it with their own notes on whether or not somebody's going to be a new hire. But this is really starting to make hiring decisions based on the amount of based on the potential qualification for WOTC. This next part then is tracking hours, and the reason why this is important is that, you know, I mentioned earlier we also calculate the credit. Well, the credit is based on the hours worked and the wages earned of a qualifying candidate. So up until the time that a qualifying candidate, I'm using Jane Doe again, up until the time Jane Doe hits 120 hours, even if the state has certified her to be eligible for a tax credit, if she doesn't work 120 hours, if she quits or is terminated before that time, none of her hours or wages will qualify for the tax credit. So there's a very important first step in helping the qualified individuals hit 120 hours. Once she hits 120 hours, we can go back to day one, her wages starting from the beginning, and multiply them by 25%, and that's the amount of the tax credit. So once she hits 120 hours, it's 25% of all of her wages. If she maintains and works until she hits 400 hours, then we can go back to day one again and multiply it times 40%. So it actually increases the tax credit even on those first 120 hours by 15%, just to get up to the 40%, where we're able to take a higher tax credit on our hours and wages. So that 120 hours and that 400 hours are pretty important milestones. These are the reports then that we do to track how many hours. So this is the first report on the left-hand side are folks that haven't even hit the 120 hours. They just started. Some of them haven't even started working. Some of them have been working for a few weeks. You can see, hey, if we can get this person to work a few more shifts, then we're going to hit this 120-hour mark, and they will start generating a tax credit. On the right-hand side, then, is a report that tracks those that have hit 120 hours but haven't yet hit the 400 hours. So these are folks that are already generating a tax credit, but if we can get them to 400 hours, we can actually push them over the edge and have them generating an even higher tax credit at the 40% rate up until the maximum amount, which Philip mentioned earlier. The last piece that we do is we measure results. If we're going to set expectations and we don't do anything with it, then it's really not worth setting expectations. So we always measure against what we originally sat down with the company and determined what they would get. And this is a typical update meeting. For this particular entity, we think that they can get $1 million tax credit. Their current run rate, as you can see, is a little over $800,000. And then we go through and say, okay, why is there a gap there? What's going on? Are we comfortable with it? You know, should we lower the goal? What's happening? And so for this company, the goal is to screen obviously 100% of all job applicants, and we were doing that at 2 of their locations. However, there were a few that were less than that, and so we had to talk through how do we motivate those locations to make sure everybody's getting screened. And then, like we talked through that whole process, the next part is making sure that eligible employees are placed. This is a staffing agency, so it's placing eligible employees. And for your company, that wording might be different. It might look a little different, but it's still like, how many eligible employees are we bringing on board every week? Are we able to get these folks working? You can see point 3, step 3 there is, hey, are we making sure that they're hitting their minimal hours? This particular company wanted them to hit at least 500 hours because it was a staffing company, and then they would actually, it was staff to hire. So it was a little unique, but this is, we just talked through the goal here, and then we started tracking going forward. How are they doing against that 500-hour mark? And then the last part here is just payroll information. We do need regular payroll feeds, which is great that you're working with Paytime. We work really well with Paytime. And the reason for those payroll feeds are just so that we can get the hours worked and the wages earned and be able to calculate the tax credit on a regular basis, so that you as a company know what's going on with this program. You can anticipate what it's going to be on your tax return, or if you know how it's going, and if it is less than what we thought, why it is less, and we can talk that all through. So this is a typical conversation that we have with our clients. So this whole where does WOTC fit up front, and I know I keep stressing this, but it is a really important piece. Up front, it really is important that we're screening all of the job applicants or new hires wherever it best fits into your specific hiring process, and trying to get that to 100%. And so we work with companies to make sure that that's as seamless as possible. The diversity programs is actually interesting. It's not necessarily something that we ever thought about necessarily up front, but what we realized and what companies began realizing as we worked with them is that implementing this program helped them increase their diversity. We had companies put PR little notes out on media and different things like that because they do have goals, and it just helped with some of those internal expectations as far as diversity is concerned. So it's not necessarily something we focus on, but it was a result which was pretty cool. And then lastly, once we are screening, we feel good about where the screening process is, and we talk to companies about, hey, how do we, does it make sense to start implementing this in a way that hiring decisions are actually influenced so that you can then increase the tax credit, not only get what you would get because you're hiring the same folks that you would otherwise hire, but hey, here are some folks, or here is the result of those who have been screened during the job application process. Hey, hire these folks, you're just going to up your qualification percentage, and obviously your tax credit will follow that increased eligibility percentage. So with that, Philip, I'll go ahead and turn it back over to you.
Sure. Teresina, thank you very much. As we mentioned, this is the end of the presentation. We're going to open it up for a extended question and answer session, so please take this opportunity to write in your questions. We're going to keep all attendees on mute during the question and answer, so please submit all questions via the question tab off to the far right. We've got some questions coming in here. This is a good one. This is one, Teresina, that we run into quite often. How would the tax credits be applied to the owners of an LLC?
Sure. So this is a federal tax credit, and if your entity, if your company is an LLC or an S corp or some sort of flow-through entity, it will flow through up to the owners according to the ownership agreement. So the owners will be able to share that, take it on their personal return. It goes through on the K-1. But then the other thing that a lot of owners often ask is it limited by AMT? And this credit, in fact, is not. And so that's something that's really nice. If they are in that AMT part, but this credit will be limited by it, they'll be able to take the amount of the credit that year. So that's something that often gets asked as well.
Okay, great. And like I said, we entertain that question quite a bit. So great question. When does the WOTC paperwork have to be submitted as it relates to a start date?
Sure. This is by law. It has to be submitted within 28 days. So for our companies our clients who screen electronically, usually isn't an issue because we get that information right away and we're able to turn that around, start working with the state workforce agencies really quickly, and we don't run into any deadline issues. For companies that it works better in their online and onboarding, and hiring system to screen by paper, part of the issue there is making sure that we receive that paper documentation in a timely manner so that we can file within 28 days. Because if we don't hit that 28-day mark, we're going to be, we're really going to lose part of that tax credit. We're not going to have that same opportunity. I will say this though, real quickly, Philip. So what's interesting about, we talked about this look back opportunity for 2015. This is what's so unique about it. So we have this hard deadline of 28 days for anybody who, starts from their start date. This in 2015, the IRS is allowing us to go back and screen all new hires, submit the necessary paperwork to the state workforce agencies, and they're waiving that 28-day mark, so that 28-day deadline. So it really is a unique time that we can capture that information, screen, and get certifications and calculate a credit for your 2015 hires without having to worry about that 28 days. But now, starting January 1st, 2016, that 28-day deadline is right back in play, and for your 2016 hires, we do have to file them in accordance to that 28-day deadline.
It's a great question, and Teresina, thank you for answering that. And just to kind of recap and to add what Teresina said, we are talking about two different programs here. The look-back review for 2015 hires has to be completed by April 30th of 2016, okay? And then if you would like to screen and get a tax credit for 2016, you do have to have the paperwork certified and submitted within 28 days of the start date. So we are talking about two different programs, and Teresina, I appreciate you making that distinction. Next question. Can you walk us through the eligibility requirements as it relates to the hours worked for certified or eligible employees? Basically, when do employees get, how many hours do they need in order to accumulate a tax credit?
Sure. So this is where the 120 hours really makes a difference, because an individual that is certified by the state needs to hit that 120-hour mark before we can start taking a tax credit on their wages. So, and then again at 400 hours, then it jumps to 40%. And part of the reason for that jump is that Congress, the way they implemented, just really wanted companies to, hey, try to keep these folks on longer. The longer people stay on a job, the less likely they are to quit or to be terminated. And so if we can keep them on for, 400 hours, 10 full-time weeks or more, if they're part-time, then they are more likely to stay on that job and ultimately get off government assistance and different things like that. So the mark really there, the initial is 120 hours. That's the bogey to initially look for.
Great. And then two questions, and then two last questions here. In regards to the new pool for 2016, the long-term unemployed pool, what are the stipulations for that?
We're still waiting for how to document and show, how folks have been unemployed, but they do need to be unemployed for 27 weeks in the last year, and they do need to have received some sort of unemployment compensation either at the federal or the state level. So we know that those are both elements that need to be met, but anything else or how that's going to work, we're waiting for the Department of Labor to give some more clarification around that new pool. But we have begun asking people if they've been unemployed at all during the previous year and how long, just so that we can start capturing that. So, once the guidelines are out, and I'm not sure how long it will take. Sometimes government things take a little bit, but we don't want to miss out on opportunities in the meantime. So we are asking those questions, and hopefully we'll get that clarification soon.
Okay. Last question. Where would you recommend us or any organization integrating your screening tool in our hiring process?
Yeah, that's a great question, and it really comes down to understanding the unique hiring process that you have as a company. So ideally, it would be a part of the job application part where we, if you use an online job application and it's integrated directly in that, which we've been able to do, then it does make it simple as far as gathering that information and pushing back who qualifies or who doesn't. But I know that for some companies, they implement it different ways. Some, as they walk in the door, people fill out paperwork, the paper copy. Others will shoot an email to everybody that they're thinking of hiring and saying, hey, welcome to our company. Would you please fill out this paperwork along with your I-9 and, all of those types, W-4, all of those types of federal paperwork. So it really is a conversation that I like to have with companies to determine how do we best fit this in so that it's part of your process and it's not disruptive to something, to a process that you've already created.
Sure. And if I can, Teresina, I'll just add maybe some observations from some of my clients. Mm-hmm. We're working with a large motor carrier who hires literally thousands of drivers every year, and they have decided to put our online WOTC questionnaire in their applicant process, whereby if a new driver or potential driver comes in and starts to fill out an application, they want to know right then if this person is eligible for the WOTC program. There's two reasons for that. Number one, the volume, just the sheer volume of trying to onboard thousands of drivers a year. And then second, the hiring decisions for this motor carrier are done literally in hours and days. And so we just don't have the time to certify if we're not doing it at the applicant level. Then we're also working with a rather large staffing firm that does not make onboarding decisions exclusively on their own. They have to obviously work with the end client. And so they have decided to put our online questionnaire on the onboarding process. So again, like just adding to what Teresina said, it really depends on your recruiting and onboarding process. So I think it differs per company and per situation. One last question, last question to come in. I've never heard about this program. It sounds easy to implement. What are the risks associated with executing a WOTC program?
Mm-hmm. So usually when people talk about risks like this, they're talking about one of two things. If they're in the HR department, they're asking, is there any chance that I'm not, that somebody's going to sue me for asking these questions? And we talked about that a bit earlier, that this is not, this is run through the Department of Labor and the IRS. They have both signed off on it. It's congressional tax credit. Everybody, the questions that we ask are very specific to what we're allowed to ask, and they're worded in a specific way so that we can gather this information. And the goal really is to hire in favor of these folks. So although some of them, like people with disabilities, different things like that, it might seem tricky, but the purpose is to discriminate in favor of. Both the IRS and the Department of Labor have signed off on the questions and have said, yes, definitely, please ask these questions and help these people get jobs. So that's a risk that I often hear from the HR group. From the tax or finance group, I often hear the question of is there any chance that the tax credit will be reduced for some reason once it's on tax return? So the nice thing about this program is, although there is a lot of work up front in working with the state workforce agencies to certify that Jane Doe does qualify, because all of that is done and because she's already certified, by the time that tax credit is taken, there really is no question as to whether or not this would qualify, that this tax credit amount is good or anything like that. So I've been working in this program since 2001. I've never seen anybody get audited or reduced. I've never seen the tax credit reduced for any reason. And so it's a good program. I've never, we don't even tell companies to reserve against it for any reason. So it is a decent program, and once you take that tax credit, there really is little or no risk that anybody's going to come back and reduce it for any reason.
Good. We entertain that question all the time. That's a great question. They've all been great questions today. That does conclude the question and answer session. So one question you might be having is, how do I get started? Again, we've talked about two different programs here this afternoon. We've talked about the look back review, and then we've also talked about the go forward in 2016. The look back review enables every employer to look at new hires in 2015, okay? And the go forward is a real-time screening for 2016 and beyond. You're screening for new hires as they come on board. So we wanted to spend a little bit of time talking about the look back review today. For people that are in organizations that are new to WOTC, we believe right now it's an incredible opportunity to start screening. It's a wonderful time to get familiar with WOTC, and it's a great time to engage with a WOTC provider like Claris. It's extremely easy to get started if you want to perform a look-back review in 2015. The only pieces of information that we need from you, employee name, email, cell phone, start date. We could add a fifth element if you want to give us the hours worked per employee. That would be tremendously advantageous. Our next goal at that point is to go out and notify your drivers and employees as it relates to them trying to fill out the online WOTC questionnaire. The goal here is to communicate with your employees and drivers to determine if they are eligible, and the only way to do that is if they complete our WOTC questionnaire. So we've had clients that have executed the look-back review, and they have taken upon themselves to email and text all new hires in 2015 for them to complete the WOTC questionnaire. We have done this on our clients' behalf. About 90% of our clients who have executed a look-back review have asked us to send out the notification email and texts. With the text message, it's very simple. We just say that we'd like them to complete the WOTC questionnaire. There's a link embedded within the text. It takes them right to our questionnaire online. And if they have a smartphone or they're on PC or even on a laptop, they're able to complete the online questionnaire and actually give us a digital signature. At that point, we are off to the races. Teresina and her team are going to verify information. And if we feel that they qualify and are eligible for the program, we will work with the appropriate state workforce agencies to certify each employee. So it really is, we need some information from you up front. After that, we execute the communication and the notification plan. And after that, we are off to the races. We are going to send you reports on eligibility, on pending, and how many employees are certified. And we are going to give you a rolling total of your estimated tax credit. It's very simple to get started. We recommend that folks that are not familiar with WOTC start with the look-back review for 2015. And then once that project ends, we can certainly start to go forward for 2016 and beyond. So I know I ran through that very quickly. At the end of this presentation, Paytime is going to send out this presentation to all attendees. We'll have some information on there in that attachment that shows a little bit more information about the look-back review, kind of a starter kit for a project plan as it relates to the look-back review. So with that said, please give us a call or email us if you have any questions or concerns. We'd love to talk to you. Teresina in the past has offered to sit down with everybody in attendance and just talk about WOTC. It's not a sales opportunity, but really more of an audit or a conversation. If you're currently doing WOTC internally or you've already engaged with a different WOTC provider, again, Teresina and I will make ourselves available just to talk through our processes and how we're different. Maybe there's a good chance or a good time to make a change. So with all that said, Dustin, everybody at Paytime, we really appreciate the invitation to present this information to your clients. You have Dustin's email right there. You've got my contact information. Please let us know if you have any questions. And also, you will be getting an email with this presentation attached and also some additional information regarding the look-back review. Again, thank you so much for joining. This concludes the presentation. Have a wonderful day.